What is going on, everybody? It's Jordan Cameron back with another video today. So we got total market cap sitting on top of the 50-week moving average right here, guys. We have Bitcoin sitting on top of its 50 moving average band right here. We have Ethereum capitulating just like it did back in 2020 below a very important trend line. We also have stablecoin market cap, right? Or dominance, right? Tether dominance plus USDC dominance at a very important resistance level. What does all this mean for us? Well, in this video, we're going to try to put it all together here. So let's jump on in and not waste any time. So I'm going to start here with total market cap. The total market cap is at its 50-week moving average. Now, what does this mean for us? Well, if you take a look at where we are right now, look around the crypto market, what you'll notice is each time that total market cap has come back down to this 50-week moving average has marked the low of the pullback or consolidation, right over here in June 2023, in October of 2023, over here in August and September of 2024, and where we currently are now have all marked the lows for the pullbacks for total market cap. What you'll notice is each time we've come back down to the low, there's been a different narrative or reason why we've come back down to that low. And it seemed like the sky is falling and everything is over, right? But each time that we came back down to here, if you were in fact bearish at the 50-week moving average, you were in fact a part of the herd, right? And here we are again, back at the 50-week moving average total market cap, sentiment being really, really bad, right? And us not getting a weekly close below that 50-week moving average band for total market cap or Bitcoin yet, right? Let's go take a look over here at Bitcoin. So 50-week moving average band, marked the lows over here in 2023, marked the lows over here in 2024, and here we are again, right? At that 50-week moving average band for not only total market cap, but also the Bitcoin price. So why this is important? Right? And this is how we're going to start with today's video of where we are and where we could end up and why I believe that the biggest run for crypto is yet to come this year and why I think the biggest run for crypto is about to happen this year. And then after this biggest run, the biggest bear market that we've ever seen for crypto in the history of crypto. And it won't be pretty. I'm not a permabull, guys. I think what's coming after this big run is the biggest bear market in the history of crypto. And I'm going to show you how I think we're going to get there, why I think this is going to happen, based on Fibonacci levels, based on dominance charts, based on total market cap charts. It's going to be a good one today, guys. So make sure you guys stick around for the video. So 50-week moving average, you guys can see that it typically marks lows, right? Why is this important, 50-week moving average? Well, every bull market so far for total market cap, any weekly close below the 50-week moving average after breaking back above in the beginning of the bull marked really, it was time to get out of the market, right? You didn't want to be in the market after any type of weekly close below that 50-week. We were in a bear, sayonara suckers. But anytime above, getting bearish at it was a mistake, right? 2017, same kind of thing. After breaking above the 50-week moving average, being a bull until you broke below. Once you broke below, like right here in 2018, it was sayonara suckers. You want to get out of the market. But it was not until you broke below that was a smart move. Just same thing in this bull market like we just discussed, guys. 50-week moving average tests. Being bearish there was part of the herd. Being bearish there was consensus. Here we are again at that 50-week moving average. Now, you can't just put that as something that, okay, we're at the 50-week moving average, we have to bounce. No, it's not guaranteed we do. But we're going to put together a few different things. So why I believe we're about to go on the biggest run that crypto has ever seen, market cap wise, maybe not percentage gains, but total market cap wise, a couple different things. Okay. And I first want to take a look at, now that we know where we are in this current pullback and why I think we could get a bounce, because that's what we've seen in the previous times we tested that 50-week moving average. Let's go take a look at stablecoin dominance. Okay, so this is Tether dominance plus USDC dominance. Now, why is this important? Well, if stablecoin dominance goes down, that usually means people are selling stablecoins into other cryptocurrencies. So prices of other cryptocurrencies go up. whether stablecoin dominance goes up, right? People are selling cryptocurrencies back into stablecoins, right? So an inverse correlation to crypto prices. Now, what we've just seen since January is a swift move, no pun intended, swift move, up to this very important resistance point. And what I think we're forming right now, guys, is I think we are forming a Wyckoff accumulation structure on stable coin dominance. Now, what is a Wyckoff accumulation structure? A Wyckoff accumulation structure is when you form a very long range, and what you typically see is 3 hits to the low, right? So right now we have 1 hit to the low over here in March of 2024. We have a 3rd hit to the low over here in December 2024, but we've yet to see that 3rd hit to the low. Now, it's no guaranteed we do, right? We could see a double bottom here in reverse, but what you'll notice is this level right here at about 8% dominance is such a big level. We've seen many rejections at this point, whether it was over here in June of 2021, it was right over here in March of 2022, it was right here in January 2024, it was right here in August and September of 2024, and you guys can see that we're now at that point again. Now, what I think would make the most sense, and this is all going to tie back into the total market cap chart going to a possible 10 trillion, right? That sounds crazy, but we're going to take a look at why I think we could get there. And this is a major proponent of that. What I think we're going to see is somewhere in this 8 to 9% zone. This could push up a little bit higher, maybe even take out this high. But somewhere in this zone, I think we're going to see a rejection on stable coin dominance, okay? And what this is going to lead to, in my personal opinion, is, if we just take off these arrows real quick, this move back down to the range lows, as you guys can see, we're stuck in a range. It's a range until it's not. This move back to the range lows, whether we push a little bit higher on this in cryptocurrencies, Bitcoin, Ethereum, altcoins get a little bit lower on their pairs, push up a little bit more, or at this current level, this down move right here, back down to range lows and taking out these lows, I believe is going to be the proponent of what bounces us from this 50-week moving average again, just like we did here, just like we did here. It's going to be the proponent of us bouncing from this 50-week moving average up to the possible top of this wedge. Now, you might be saying, Jordan, that's ridiculous. We're not going to go to the top of that wedge, and we might not. But let me discuss a few things why I think that's possible, okay? Why we could get a move back up to the top of that wedge, okay? First of all, like we just discussed, stablecoin dominance at a major resistance level where we've seen 1, 2, 3, 4 different rejections and moves down, back down to these relative points in the past. So we've seen that in the past. A move down here for stablecoin dominance would be the proponent to get us up here. And let me explain it. So last bull market, right, from the 2018 top to that 2018 low, if we take a Fibonacci, what you'll notice is from that Fibonacci top to Fibonacci low, we went up to hit the 4236 Fibonacci level. You guys can see we pretty much spot on came up and hit that 4236 Fibonacci level right there, okay? Now, what I think is interesting here, and it's just an interesting observation and ties into everything else we can see. What I think is interesting, if we actually take again a Fibonacci from our previous bull market top, 2021, to the lows in 2022, what I think is very, very interesting here is that gets you, right, that next 4236 Fibonacci of this move gets you to that 10 trillion point. What I think is very, very interesting about this, very interesting, and maybe it's just, a weird little coincidence, but the 4236 Fibonacci level, sometime, right around that range in July or August, gets you almost back up to the top of that wedge, right, where we have 1, 2, 3 touch points, and a third touch point being slightly above that 4236 sometime in the summertime. Now, is it guaranteed we get back up to the top of that wedge? No, nothing's guaranteed, right, guys? Nothing's guaranteed. we could dump here and this could be the end of crypto, right? But what I think is interesting is if we put all this together of a move like this, which looks big, right? It really, that type of move looks big. But if you actually look, we actually went to almost a $4 trillion market cap just over here back in December. You're only talking about a little bit over a 2x in market cap. You got to understand, guys, from October 2023 to December 2024, we almost 4x'd in market cap. So to do another 2x from the previous high is not that crazy. It looks crazy on the chart because it's such a big market cap move. And this is why I say I think we're about to see the biggest market cap move in crypto history. Not the biggest percentage, but market cap. This move here really correlates to me with stablecoin dominance coming back down and making one more new low here. And then this stablecoin dominance actually pushing up, and this just being one giant Wyckoff accumulation on stablecoin dominance, which would, incorsely say, if that was a word, inversely, would mean that this would come down, right? And this is kind of my base case at the moment, is what we're seeing is a Wyckoff accumulation range forming on stablecoin dominance, which eventually will break higher, but this final move will be an explosive move for cryptocurrency up to that 4236 Fibonacci level, like we just discussed, right up in this range, just like it did right over here in the previous bull, right? Put everything together. We're at the 50-week moving average. Sentiment is shot for many different reasons. Tariffs, the Fed, no bullish news on crypto pushing anything up, which you should expect at this point. Bullish news does not push up prices, guys. If you haven't been around this asset class for that long, bullish news usually marks some type of consolidation top. It's usually when everything looks bad and everything looks ugly, when there's bearish stuff, when there's nothing good happening, is actually when you get the moves up. Think about it. When did we get the moves up or start the moves up last? Couple moves. FTX implosion. German government selling Bitcoin. We did not start and bottom on good news. We bottomed on bad, crappy news. And here we are again at the 50-week moving average with bad, crappy news. And I bet if you see this type of move to the top of the wedge, if you do, no guarantees, but if you do, there will be the most bullish news that you've ever seen for crypto. Probably more bullish news than you're even seeing or you saw back in December and January for the strategic Bitcoin reserve, Trump winning, all this stuff. You probably will be seeing even more bullish news up there. But ultimately, what I think it will result in is the biggest dump in crypto history, but only after the biggest market cap pump in crypto history, back up to the 4236 Fibonacci, completing the 5-wave structure of this bull market. If I could get the Elliott wave, right? 5-wave structure of this bull, which I believe really started here. We have 1, 2, 3, 4, and the final 5th extended wave to the upside before the biggest bear market that I think we're going to experience. But I've seen markets, and I've seen that usually before you get these big, giant, massive sell-offs, you usually see the most hype times where everyone is literally on drugs, thinking everything is going to go up forever. And I don't think we had that vibe here. But I do think if the total market cap pushes up to this 4336 Fibonacci at the top of this wedge, forms this long-term bearish pattern, that will create the hysteria for what will create the biggest crash in crypto history and I believe in market history. And it's all going to stem from the stablecoin dominance, which everyone will get super bearish on this as it comes and takes out these lows. But in reality, I think this is just a giant Wyckoff accumulation structure, which is the inverse correlation to crypto, where this will make one more new low, and during this move here will be the biggest crypto pump in history before ultimately this pushing back up and arguably even making new highs. That's my thesis at the moment. So we'll see what's happening. It's a really boring time in crypto right now. There's not too much to say, right? Can't be making videos every day, streaming every day. There's not too much to say. It's a very boring time in crypto. But what I've been in this space long enough is when it's boring and it's extremely fearful and the herd goes away, and when everyone starts saying that altcoins will never pump again, is at times where you have the biggest moves shortly after. All right. And this is the type of thing that I think we're gearing up for, is that final fifth wave to the upside off the 50-week moving average up to that 4236 Fibonacci level, which I do believe that this move will be mostly altcoin driven. Okay. Bitcoin will move up as well, but I think this move will be mostly altcoin driven. And what will come after that, when you have everyone believing that the world will be changed by cryptocurrency, right? You have everyone believe that every country is going to start using altcoin, some type of altcoin, right? Every country is going to start using blockchain right away, which I do believe will happen in the future, but not right away, will be the cryptocurrency bubble, aka the .com bubble of this decade, where blockchain may well change the world, but everyone will be a little bit too early. Where everyone will believe in blockchain up here for some reason, right? Whether it's one altcoin getting used in the real world by BlackRock or something happening with tokenized assets, or, XRP being used, I don't know. But everyone will start believing in altcoins up here. Everyone will start believing in that blockchain will change the world up here. No one does here. Everyone will here. And once everyone does, right at that 4236 Fibonacci, right at the top of that wedge, will come the biggest bubble that we've ever seen. And out of that biggest bubble we've ever seen, I do believe, well, this is for the future. This is for the future, guys. But after this biggest bubble we've ever seen, I believe that the strong, just like the internet.com, the strong projects, which I plan on buying back down here somewhere, will come back and absolutely will change the world. But that's my thought, guys. A lot of you guys will laugh at this right now because it sounds stupid because the market's down, and whenever the market's down, people don't think it can go up again. Which the same thing happens over and over again, right? So let's see what happens. I think we're shaping up for stablecoin dominance, forming that Wyckoff accumulation structure in here, which is basically maybe it pushes up a little bit higher, which brings Bitcoin maybe a little bit lower, which brings altcoins a little bit lower, but I don't think that much lower than they currently are now. Right? So the thought process is one last blow off top for total market cap. Everyone's super excited and believing in cryptocurrency again before they rug pull the entire markets, stock markets, Bitcoin, especially altcoins. And then we buy back down here somewhere. That's the thesis, guys. It may play out. It may not play out. We could just dump from here and it'll be over. But that's the way I'm thinking about the market right now. So let's see if it happens. Let's see what happens, my friends. But I think we got an interesting blueprint here ahead of us for, once again, what I still believe is going to be a fantastic year for crypto this year. Hasn't been yet. Definitely has not been. But I think when you look back at this year, I do believe many of these coins, utility coins, will be much, much higher than they are now. Or will hit at some point much, much higher prices than they are now. They may end the year lower, but I believe at some point they will be at much, much higher prices than they are now. And I plan on taking advantage of that. Won't be everything. Won't be every altcoin hitting new all-time highs. Won't be every altcoin pumping. But I believe if you can pick them well, this year will be absolutely insane. Just as everyone starts to give up. So that's the video for today, guys. Jordan Cameron, I'm here. Hopefully the market gets a little bit more fun soon. But the thesis has not gone away. We hold the 50-week moving average on total market cap. We hold the 50-week moving average on Bitcoin. We are looking for higher prices. Much, much higher prices. Up to that 10 trillion market cap for total market cap. Before the rug pull. All right. I'm out, guys. Take care. Much love. Subscribe if you're new. Like the video. And I'll catch you in the next one. Peace.